Hey, this is Josh Taylor with Trade Advisor Pro, and I want to thank you for checking out our video today. Now, before we get started with today's free Forex training video, I want to give you a chance to pause this video right now and go to our website. Trade Advisor Pro offers you free Forex trading videos, and trade alerts. And folks, you do not want to miss our trade alerts. We send out a bunch of trade alerts every month that are top rated in the industry, where we send you our exact trades right to your inbox. Pause the video now, go to tradeadvisorpro.com/free, and all you have to do is register and then come back to this video, and we'll be sending you a lot more goodies to help you with your Forex trading. Enjoy today's training video. Alright, so we're going to get into today's trades here. We have 6 trades coming up here. I want to show you exactly what we're doing here. And one of the things I want you to know here is when we trade, if you've seen, and I've shown these pictures before, you've seen charts with 101 different indicators trying to figure out which way the market's going. Folks, pro traders do not trade like that at all, okay? They focus on pure price action trading. That is, where is price moving in the direction you find a good entry, you find the trend, whether it's an uptrend, a downtrend, or a sideways trend, and you choose to, most of the time, 90% of the time, you want to trade with the trend. You wait for a pullback to the right opportunity. You take an entry. You find a good opportunity for a stop. You make sure you have, most of the time, at least a 2-to-1 risk-to-reward ratio. So if you have a 100 pip stop loss, you want to make sure that most of the time that you have a 200 pip potential move. All right. So at that point, when you have a 1-to-2 risk-to-reward ratio, you can actually lose more than half your trades and still come out very profitable. Okay, so we're going to get in here again. It's a pure price action. So when you're looking at my charts, we're not going to be showing a bunch of crazy indicators and all this. We're showing trend lines, support and resistance, and trends. Okay, so here we're looking at the CAD Swiss, the Canadian dollar against the Swissy, and this is on the daily chart. This is all I trade is daily charts. Sometimes I look at weekly charts, but I focus on higher time frames. It is a lot less volatile. It is going to help you sleep longer. If you're trading off of 5-minute or 15-minute charts and you wonder why you're stressed out, go to 1-hour charts and simplify your trading. Okay, so here we can see, I'm going to show you some different things here, but you can see here, and I'm going to start closing out some of these lines here that I have drawn, because I'm going to draw some of that out so I can show you why I've taken some of these trades. And I'm going to keep these these trend lines, this channel line. But you can see how this thing was channeling up and down, up and down, up and down for a period of, let's see here, middle third week of October all the way through. So we're talking about what, 3 months? So for 3 months, you can see how this thing is pretty much right on the beat, man. This has come up and down, up and down, up and down, up and down, right off this trend line. There's a lot of opportunities to buy, sell, buy, sell. Now these were longer term trades. You're going to be in here for a couple weeks at a time. But when this currency pair goes sideways, it's a lot easier to visually see. So let's draw out some lines. It's very easy. And I talked about this before, that you want to think about support and resistance as ceilings and floors, okay? And so here we are. We have a floor. You can see here that price came down here to this point right here at 9,100 and bounced off, right? And it similarly came down pretty close to it and bounced off. It broke through, but eventually broke back up a couple days later. But in this area, there is some level of support. So I can bring this out. Oh, if you want to look across for almost the last 6 months, 8 months, you can see that there's a little bit stronger support in there. Not the most perfect support, but it's a decent support level. Okay, but recently, you can see right here, okay, there's a really strong support/resistance point. So I want to show you this. Eventually, as you can see right here, for a couple of days, price was coming pretty dang close to this area and rejecting, right? Rejected, and finally it broke past. Right? So imagine this is the ceiling. You finally were able to walk up the steps, and once you walk up the steps, that ceiling now becomes your floor that you're standing on. So now you can see that prices are having a difficult time breaking back through the floor. Eventually it breaks through the floor. See it now, it becomes the ceiling, right? So your resistance now becomes your support. Once it broke through what was your support, now becomes your resistance. Do you understand? So look for those. And you can see here all across here, even a few weeks later, boom, it rejected off that, boom, rejected off that. Difficult time here, broke through, struggled a little bit, and now we broke through. So here's what we're going to do. We're going to look at some good potential trade opportunities. And we're seeing that this thing, and we talk about this in other videos, but I want to say this again, that 80% of the time, a currency pair trades in a channel. Okay? And a lot of times, and this is the channel right here. You just got to be able to find the channels. This is a channel. There's actually a small wedge channel in here. This is a channel in here. It had a small period of breakout, small period of breakout. But what I believe now is this pair is coming right back down into its previous channel. So what I'm looking for, since I'm seeing this thing going to be dropping down here, okay? And in fact, we're going to set two different trades, and one's going to be a little bit more aggressive than the other. Actually, you know what? We're not going to take that long position until I can see that this trend is going to hold. But I'm looking at this thing coming back down here a little bit. So what I'm looking now is we looked at Friday that this pair, and today's Saturday when I'm doing this, market's pretty much closed, but I can start looking at positions now for the week ahead on where I want to start getting in these currency pairs. So we look at here. You can see here on March 16th, 2012, that the high of this currency pair went up to 93.11. Okay, so and then the low at so it's moved almost 100 pips. What I'm hoping is that Monday, when actually Sunday evening Eastern time, when the Asian market hits, that the Asian market is going to try to force this pair back up, since it did go on this little mini uptrend thing here for the last couple weeks. It's kind of been moving up here. Okay, so I'm hoping that this currency pair will move up into this range here. Let me see, around 92, 93. Actually 9300. I'm hoping it'll come up around the 9300 range, because you can see here that this thing likes to come up and touch this thing. It has over the last few days, and because Friday's that's actually below Friday's high, there's a chance on Monday this thing could go up there. So what I like to do is not set my sell price at 9300, but a few pips below, around 93. Let's say 92. Okay. So at 92. I'm sorry about that. So we're going to make this green. This is just the way I like to do it. This is for me to visually see where I'm looking at my entries. I'm hoping price pulls back up here to this 92 mark. Okay. Now where would I put my stop loss? I'm going to put my stop loss on the nearest swing high that had it where price was rejected. So where would that be? The nearest swing high was right here at 9400. Now if you look across here, back in December and in January, this pair actually are these both? No, these are both January. In January, and then here in March, price came up to 9400 three times. This is what you call a confluence of events. Okay, this is where the confluence of I guess you want to say of resistance, where right here, and right here, prices come up to 9400 each time, and what you need to understand is there is a constant battle between two forces. All right, think about Star Wars. Okay, you've got the Jedis against the Sith, the good guys against the bad guys. Now this isn't good against bad, but you have buyers against sellers, the bears against the bulls. Okay, the bulls are the buyers, and the bears are the sellers. And what you have is constant buying and selling pressure. And if you have more buyers willing to sell a currency pair than you do, more sellers selling a currency pair than you do buyers, then you have more selling pressure, and the currency pair is going to go down. If you have more buyers buying a currency pair than you do sellers selling, then you have more buying pressure, and the currency pair is going to go up. So right here, three times, 1, 2, 3, the buyers, the bulls, ran out of gas, and the bears took over and dominated. Okay, and so you can see that if this price is already shown three times over the last several months that it will not allow the market to break past 9400. Does that mean it can't? Of course it can. It can do anything. We don't hold a crystal ball. So what I want to do is set my stop loss above this recent swing high. And what I like about this swing high is that this is going to have a very difficult time. It's already proven over the past of breaking through there. So I like to keep this thing right above here a little ways, maybe 20 pips, okay? So we're going to say at 94.20. If I can get this thing to stay on 20, okay? Now this is where we're going to put our stop loss. I'm going to color that red. And this way, when I color my charts like this, I can visually see where I got in, where my profit target is, and where my stop loss is at. Now, since we're in this channel, what I'm looking for price to do is to come down to this range in here. But and this has happened lots of times, guys. You can't squeeze. There's a saying that I always say. It is pigs get fed and hogs get slaughtered. And what that means is you want to be a pig in the Forex market. Take some pips. But a hog is the guy who's waiting out to squeeze every last pip out of a trade. And here's the problem. Like for instance, if you were let's say that we took this trade. If price comes up on Monday or Tuesday and it spikes up to this range, and we takes our sell position in, and we have our profit target set here, okay, right down to this 9100 mark, which is some decent level of support, but it's not perfect. All right, so we're going to label this green, and you can see over here that price came down close to the line a whole bunch of times. Okay, so in that instance, when if we sell this pair and it drops all the way down to right here, let's say right in this range, it didn't take our profit target, but then the next day some big news announcement came out and boom, 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 this thing is shot up through the roof. The Canadian dollar, whatever, is some wonderful thing that's going to help the country's economy blow through the roof. The Canadian dollar against the Swissy shoots up and in 1 or 2 days gets us stopped out. Now we were that close, man. I mean, we're talking about we were up almost 200 pips in profit. And instead of taking our profit, we waited till the last minute to try to squeeze every last pip out of that trade, and we missed it. So here's what I'm going to suggest. You see this range in here? There's a lot more support on that range than there is at the 9100. This line right here is 9120. I'm going to even go higher and say that you would want to go up to 9130. Why? Because our goal is to pull the pips out early. Close this trade. At that point, you're, what's that, 170 pips? If you're leveraging 2% of your account balance, your risk to reward ratio, you've got a risk of about 130 pips. You make 170 pips. If you risk 2% of your account balance, you just made about a 3.2% return on your trade. Now listen folks, let me tell you a little bit about making money in compound interest. Anybody who can make 3% a month on their money, solid and long term, is going to be very wealthy. And you did this on one trade. So don't be greedy. Take some pips early, and there we go. So that's what we're going to do. That's trade number one. All right, we're going to sell the CAD Swissy at 92.92. All right, let's go to the next chart that I have here. Is the pound dollar. Okay, now one thing I like about the pound dollar, and this currency pair is a little bit more aggressive than some. So if you're brand new, if you're using our signals, wonderful. You can take these pound dollar trades, but if you're trading on your own, you've never traded before, I wouldn't suggest trading this pair. It can move pretty aggressive pretty quick. But you can see, again, currency pair moves 80% of the time in a channel. Okay, so let's start looking at where our simple support and resistance at. You can see in here we have a solid support, right here. See along here, right in this area here. In fact, let me back this pair out a little bit. Oh, look at here. This is beautiful. What is that line here? That is about 5,700. Seems like a really solid support. Okay, right here, great support. Boom, great support. Resistance, resistance, resistance. Support, support. It broke through a little bit, but it had a real struggle. See this? How it rejected these pins? Boom, boom, boom. It rejected, rejected. Now we are at 58.39. All right, so that is one level of support. and then to get some resistance levels right around in this range here. Just back in here, see long term. I want to look at long term, yeah, okay. Now long term, you can see that this mark here, which is 5,900, has been a difficult point to break. Boom, boom, right? This is all the way back in early 2000, summer 2011, fall of 2011. You know, you see that back here in January, and it broke through for a few days and then rejected. So I'm going to look at that. Oops, wrong thing. As a pretty solid support level. So here's what we're going to do. We are going to take two pairs. Now, again, these currency pairs trade 80% of the time in a channel. So this is a sideways channel. This is a perfect opportunity. When you see trades going on like this, there are so many buying and selling opportunities in here. It's not even funny. Right here, buy, sell, buy. Now usually I'll sell early. I'll sell way before the line. Okay, like when if I buy near this line, I'll sell early, because a lot of times you see this, how it never quite made it up to that point. If I sell here, I'll usually pull out profit here. Okay, and sometimes it depends. If I see the momentum really pushing and this pair could break through and keep going, then at times we may close like 70% of our trade at a profit target and allow the rest to run, because sometimes you can get 300-400 extra pips out of that, and that 30% of your trade balance can make you a higher return than your original piece, the original 70% that you closed in profit. So what we're going to do, I'm looking at this 5,900 as a solid support line, but right around this range here is even better opportunity to sell. So 58.78. In fact, let's go a little bit more. 58.76. If I can get this thing to stay on 76. I can't get it to that. Okay, so I'm going to say 75, but 76. 58.76. Okay, so at 58.76, we're going to sell this pair. Now we have two trades on this pair. We're going to set up both in advance. Okay. Now this is probably going to take here Monday, because we had a strong candle, and I have a feeling on Monday momentum's going to push this thing a little bit more aggressively. And we're going to sell there at 1.56. I'm sorry, 1.5876, and we're going to close our profit right in. I want to make sure we hit. Yeah, you know, 5,700 is a pretty solid. This thing will come down to that far. So let's say 5702. Okay. So our profit target is 5702, and we're going to put our stop. Now, where do we put our stop on that trade? The best place to put our stop is above this swing high that came up recently. So right around here was the swing high. Let's take it a little bit further. Around, let's say 6014. This is going to be our stop for our sell. Okay, so color this again. So we're going to sell here. We're going to close out our profit here. Put our stop loss in here. Okay. Now our risk to reward ratio on that is about 1 to 1.5. It's still pretty good. But this, when you're trading in these ranges, we out of 10 trades we may lose 2 when you're trading on these ranges. So I don't have to necessarily do 1.1 to 2. But we're also going to take a buy opportunity. Okay. And here's what I want to do, because price keeps wanting to break down into this area here. I would love for this pair to come all the way down to 56.72 for a buy opportunity. So we would come down, and if price come all the way down to 56.72, we're going to take a buy. Okay, and we're going to put our stop loss really tight. So it's going to be a little bit down past this mark. Let's say 55.92 for our stop. Let me put the buy in here. I need to come up with a different color coding system, I think, because I realize that a lot of times I will put a limit entry order in short and long depending on where the market moves. So either way, I catch a trade. So 56.72, right up in here. Okay, we're going to color that green. This is just for me visually. And then our profit target on this is going to be here. And I'm not going to draw all in here, but we're going to keep our profit target. It's okay. Let me look. I'm going to say 58.15. You see how prices come up to this point? Even the last few days, it hasn't really pushed hard past that. So let's say 58.15 as our profit target. Okay. So there we go. We got two trades here. We're going to sell here. Stop loss is here, and we want currency the pair to come down in this range, 5,700, and we close out at a nice profit. Or if price would dip down to this 56.72, then we want to put a tighter stop. Now see here, now this is a good thing. The risk reward on this one is much greater. You can see, let me calculate how many pips. We're buying at 56.72. Stop is, so we're talking about what's that? An 80 pip stop, but we're looking at a 150 pip gain almost. So almost a 1 to 2 risk to reward ratio. Okay. So you got it. All right. Let's go to the next pair. Let's go to the euro. We're going to do the same thing with the euro because the euro has been kind of in a channel, not as pretty of one, but we're going to do the same thing as well. All right. So here we go. So we're going to take a sell and a buy position on this currency pair. So what I've seen here is around 32.67. There's a great opportunity to sell. So 32, because actually, let me come down here, draw some. See, the support here line is really close to about right there. All right. So let's delete this out. And what I'm looking at here is let's talk about our buy position first. We a couple days ago we actually took we bought right here when the price came all the way down. It came up to this around here. We sold I think at 75 or anyway we what was 170 pips, 174 pips we closed, and then price came a little further. We closed out the rest of our trade. So we're gonna want to take the same level. So at 1.3035, okay, if I can get that to stay on that line close enough, we're going to be taking a buy. Now, where would we put our stop? This one we're going to take a little bit deeper stop because actually no we're not. No, we're not. We're going to take our stop at 31.80. Wait a minute here. I'm talking about. Sorry about that. 21.52. I got notes taken down here. 21.52. I got notes here of what trades I want to take, and I'm looking at two different things. Sorry about that. Anyway, our stop is going to be here, so we're going to have a tight stop because we're looking at this thing. It's been channeling right here. You're going to, in fact, if you can zoom it in a little bit, you can see how it's been kind of channeling in here. So we want this thing to swing down to this level here, which it seems to been doing since end of January for several times. And we want price to come down to this point. And we want to keep the stop tight, but we're looking at the profit rate target on this thing right in here. Okay, so 31.80 is where we want to keep our profit target. Now, that's for a buy position. Now to sell, I wouldn't want to sell it, even though this is a little channel. This thing is broken out way too many times. Okay, this is a sell buy opportunity. This thing is wonderful. A sell opportunity, I want to go a little bit deeper in here. And I may not even take this sell opportunity. I've got to really look here. Let's back out here. Let's spread this chart out a little bit. If we pull it in a little bit closer, we can see this range right in here. 32.82, 32.76, 32.76. Yeah, I would sell this pair at 32.76. And then we want to put our stop here because this thing broke up. We don't know if it's going to do it again. I want to keep our stop up in this range to keep us protected. So 35.12. Okay, you want to make sure it's way past that point right there, which is a pretty solid. The 3,500 level is a pretty solid support level. I mean, resistance point. And then we want to take our profit around 30, 32, all the way down here. So if this trade moves all the way up to this level in here, okay, then we're looking at a really good opportunity to sell. Okay, for a nice swing down, several hundred pips there. So that's our sell position. And we have one more trade that we want to put in here on the Aussie yen. Now, on the Aussie yen, because of the aspects of overnight interest rate differentials and how the banks trade this pair, I only go long this pair. I only buy the Aussie yen. I do not take short positions. Okay, ultimately this pair will drop like a rock, and it'll adjust, and that's when we start hitting boom, 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 boom. We'll be accumulating buy positions for months. Right now, it is trending up pretty strong, but you can see long term, it's going to have a very difficult time, and it's hard to see those charts. We're at a point right now. It's going to have a very difficult time going up any further. All right, so I would be interested in another buy position right here around 86.15. Okay, so if we can get in a trade at 86.15, okay, on 86.15, then we would put our stop around 84.61 right here. Okay, be lower than the swing low. So see right now is trending up, right? So on an uptrend, you wait for a pullback, because price is always going to adjust itself. You wait for a pullback, just like it did here. See how it went up, 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 pulled back. Good buying opportunity right there. Up, 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 pulled back. Up, 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 pulled back. Really nice. Okay, we actually got in a trade here. That was really good. But we want price to see price, especially since we're 100 over 200 pips above this. 200 pip pullback could work out pretty nice. So it's probably not going to pull back to here. But I would say the 86.15 mark it will pull back. And put our stop loss below these swing lows. It was below that. And we want our profit target to be right around where the area it's at now, a few pips lower. So right here we're talking about 8,800 being a major point. So I would say a few pips below 87.92. Okay, so that's where we're going to take our profit, 87.92. We'll get into trade around 86.15. We'll put our stop loss at 84.61. Alrighty. Folks, I hope you enjoyed today's training video. If you have not done so already, stop this video now and go to tradeadvisorpro.com/free and register absolutely free for free Forex training videos, and free Forex traded alerts directly to your inbox. Go to the website right now and register for free. All kinds of goodies for you. Thanks a lot.